Well, joining me now to talk about what's happening in the property market and also around mortgages is Otto Dargan from Home Loan Experts. Welcome to the show.
Thank you, Chris. Great to see you.
Now, a lot of people are obviously thinking that there's going to be a lot of distressed sellers during COVID. Have the banks actually seen many more mortgages go into kind of mortgagee in possession?
Well, actually, in the last week, there's been a big change. In the last few months, there hasn't been too many mortgagee in possession because of the repayment holidays. But in the last week, the number of mortgagee in possession valuations jumped by about 120%, which is pretty significant. I think it's still a bit too early to say, and it's still at a very low number, but it's such a big change that it's definitely something to watch and see how it develops over the coming months.
And I would have thought that's a quick amount of time to actually get mortgagee in possession, isn't it? Because say if someone defaults, isn't there normally quite a process that the banks have got to go through?
Yes, there's a very lengthy process that the banks have to go through. So what I believe is it's probably people that were missing payments before COVID happened, because the banks didn't offer these people any repayment holiday or things like that, like they did for the people who were actually affected by COVID.
Okay, and look, a lot of the potential price drops have actually been avoided, first of all, because of that mortgage holiday, but also due to a lack of stock on the market. So what's happening with the listing numbers?
There's, in March, April and May, there haven't really been that many new listings, and that's what's been keeping prices fairly solid. But we've actually seen in June, there's starting to be green shoots in the market and there's more listings coming onto the market. And we're seeing that real estate agent pre-listing activity, which is things where agents are valuing properties and things like that for potential vendors, that's actually starting to increase. So we expect there's going to be more properties coming onto the market within the next few weeks to months.
Now, there's always been a reasonable amount of buyers still in the market because some people are obviously running away, other people are pretty confident and think it's the perfect time to buy. So what's happening with the home loan approval numbers? And I guess how long is it taking to get approved these days with a lot of the bankers working from home?
Yeah, my industry is always a bit messy, and right now it's particularly messy. There's some lenders that are taking up to a month to approve a home loan. Some lenders have been offering large cashbacks for people who refinance up to $3,000, and this has caused them to get inundated with applications, and they've really blown out. The government stats are that home loan numbers have actually gone down, but every single broker I know is busier than ever. So I think that there's still quite a lot of activity, and the secret at the moment is to apply with the right lender. You know, if you're in a hurry and you're buying a property, you can't wait 1 month to get approved. It's just not going to work.
And it's interesting seeing some of these kind of cashback mortgages, and I think sometimes mortgage brokers do that as well. Is this something that really changes a lot of people, and do they take their focus off the rate they're paying because they just think, oh, $3,000 in the bank, I can go on holiday, I can go to the pub, or I can pay off my credit card?
Yeah, everyone loves free money. If you say, hey, I'll give you $3,000, you know, a lot of people are going to jump at that. It's just really important that you always look at the cost of the loan over the life of the loan that you intend to keep it for, which is typically 4 years. So when you weigh that up and you weigh up the interest rate, some of the deals are really good and some of them are not. So you've just got to do the math.
Yeah, so it's like when you go shopping, there's all these special offers. The interest-free credit is quite often the most expensive interest you can ever get in your life.
That's right.
Now, a lot of people have been having issues with serviceability over the last few years with the Banking Commission and APRA and ASIC. Are they still worried about responsible lending now? And is that, I guess, the biggest issue for people to try and get pre-approved?
Responsible lending's been really good for Australia, and overall in the long term, it's a good thing. But when you have something like a recession, you really want the banks to lend as much money as possible because that gets the economy going. And so there's this kind of conflict between the economy and responsible lending. So APRA and ASIC have loosened some restrictions for banks, but it's typically been around hardship. So things like where someone's in trouble and they want to switch to interest only. So the government hasn't really changed the rules around serviceability. However, because rates have dropped so much, it does mean that serviceability has improved for most borrowers, so they can borrow more. But what we're seeing is it's about the non-bank lenders. The non-bank lenders are lending significantly more than the major banks. And so typically what we're doing for borrowers is we're doing a multi-lender strategy. You refinance your properties at the cheapest rate with a lender that maybe is a bit conservative, and then you buy your next property with a lender that has a slightly higher rate but allows you to borrow more.
Right, okay, and that's interesting. And I guess for a lot of people, they're either restricted because they haven't got the deposits or they haven't got the income. Is there more and more people now that we've had a reasonable rise in the market over the last few years, that they've got the deposits, they've got the equity, but they just can't do anything with that without the serviceability there?
I think it's less of an issue now than it was, say, 2 or 3 years ago. 2 or 3 years ago, it was a really big problem. And there are a lot of people that were really frustrated because they could afford a loan, but no one would give them one. So I think now the big issue is more around uncertainty and people's income. So we're seeing that people that are very certain about their income, for example, government employees or in sectors that are booming, they're all actually trying to buy. And then the ones that are more severely affected, they're all holding back.
Now, you mentioned that there's certain industries that are obviously seen as doing well or not so well. Does that mean if you're in one of those industries, you've got to prove even more than normal that, say, if you're in food and beverage or something like that, they're going to do a lot more checks than they might otherwise do if you're in government, say?
Yeah, that's exactly right. Some sectors the banks are looking at very harshly, particularly if you're self-employed. And there's a lot of people on JobKeeper, and banks are still a bit iffy about JobKeeper because they don't know if JobKeeper is going to be extended in September or if all those people are going to find themselves unemployed. And so we're finding some lenders will accept JobKeeper and others will not.
Right, okay. And what's happening with foreign buyers at the moment? Because obviously a lot of people can't come into the country, but does that mean that they completely stop investing, or are some of them still transacting from overseas?
Yeah, there's been an increase in foreign buyers actually, and this is for a number of reasons. Australia has done super well compared to other countries, and we're kind of seen as a safe haven. We're seen as a very safe economy and a very safe property market compared to often the countries that they're in. There's been a big increase in buyers, particularly from Singapore and some other countries in Asia. And we expect that trend is going to continue because there's actually more loans available for foreign buyers now, and they're quite a fair bit cheaper than they were 2 to 3 years ago.
That's pretty interesting. So I was always thinking that these brand new apartment blocks are going to be seriously having many issues, which quite often they do. But certainly good to hear that there are some foreign buyers there that will keep those developers building. Now, while we're talking on the building side of things, there was a big announcement with the 25 grand HomeBuilder Grant around. Obviously, a lot of people were criticising the government, saying we could do better things with the money. But does it look as if many people will actually take that grant up?
There's definitely a lot of people interested in the grant, but most of them are not going to qualify for it. There's many strict criteria around it. For example, there's a maximum income, there's a maximum property value, and just that alone counts out most of Sydney. But the really big thing, in my opinion, is that you've got to start construction within 3 months of signing the building contract. And you've got to sign the building contract by the end of this year. So if you've just got the idea that you want to build a house, you're probably not going to get council approval, a home design, find the land and start construction all within that time frame. It's just too short. And so really what the government was doing with this is they were trying to get people who had already, planned to build and who had delayed that decision because of COVID, and give them a little incentive, a big incentive, to actually start construction now. And so it's not really designed for people who haven't really planned anything as yet. And I think this is what was never properly communicated. And so that's why there's a lot of confusion around it. So if homeowners, it's not available for investors. If homeowners want to take advantage of HomeBuilder, what we would recommend is that they seek a house and land package, because a house and land package has everything set up and ready to go. And so that time limit is not going to be a problem. But a house and land package isn't always the best investment. So always we recommend that they use caution.
And so it's almost like the $3,000 kicker on the mortgages. It's just a little incentive if they're sitting on the fence and not knowing which way to go, just to kind of tip them off.
That's right, because otherwise the construction industry is going to basically fall off a cliff in a few months. So they really need to do something to make sure we don't have a second wave of unemployment.
And certainly you've got to look into the grants, because I know a lot of the first homeowner grants or having to buy brand spanking new, suddenly that could temporarily inflate the prices in certain areas. So it's actually a false economy. You might be getting 25 grand extra, but if the builders put their price up 50 grand because he's suddenly busy, then you're still 25 grand behind.
Yeah, that's absolutely right. And this is what we've seen time and time again when the government offers some kind of incentive to people to buy or build a property. And so always just compare to other properties in the area that have sold and just look to see, is it superior, what you're building, or inferior? And use that to then work out what your value will be when you complete construction. And if you're paying extra to get something worth less, then don't do it.
Wonderful. Okay, thanks a lot for your time and thanks for joining us.
Thank you, Chris.